Hi, thanks for watching today's video. I'm Brian, the Finance Ninja. I don't want to waste your time, so let's get to it. I'm starting a new series called The 3 Stocks I'm Buying. I will release a new video in this series each month. If you don't know me, I'm a long-term investor. I look for stocks that will rise significantly in 3, 5, or 10 years from now. Oh hey, my cat Shama wants to know too. She's going to become the finance kitty one day. I just know it. Let's see how the markets are doing today. It's mixed. Nasdaq is doing good. Tesla's up. So just remember to smash that like button. It helps us out in the YouTube algorithm. So let's get started. Stock number 1. Stock number 1 is AMD. As you can see, it's been trading flat for most of the year. When you see the growth numbers I'll show soon, this flat trading will not persist. The flat line will break, and AMD will move up. The numbers cannot be ignored. AMD has a market cap of $90 billion, a PS ratio of 7, down from 12.68 at the start of the year. So that's actually a good improvement in terms of buying the stock. Forward P of 34.72, which is low for a company growing this fast. What do analysts think of AMD? They expect growth this year of 50.8%. Not bad, but I expect them to do better. Next year, 15.3? Where did they pull that number from? That's just crazy. The Xilinx purchase itself will push AMD far past this number. Not to mention EPYC, Ryzen, and Radeon sales. Now, AMD is known for making CPUs and GPUs. It all starts here with Lisa Su. She became CEO in 2014 and has changed AMD from an also brand into a leader. She is a top 5 CEO in my opinion. I would not bet against her. I mean, just look at this historical net income chart. AMD was a dead company just a handful of years ago. As I will show you soon, they are now a beast. AMD was at virtually zero market share in servers in 2016. Look at that. Now over 10% and rising fast. This chart speaks for itself. Just look at it for a second. 93%. Can you believe that analysts think AMD will only grow 50% this year? I don't. I peg the growth this year closer to 75%, not including the Xilinx purchase. Just look at these huge earnings growth numbers. They are huge. This is what happens when you change from an also-ran into a leader. Now let's just break this down really quick. Revenue up 93%. Operating income up 223%. Net income up 189%. Here's the thing about semi-stocks. Costs are mostly fixed, very little variable costs. That means that once you breach the fixed cost threshold, most revenue past that goes straight to the bottom line. That gross margin of 46% will go up as AMD increases revenue and ASPs go up due to a market-leading product. It will also go up because the mix will shift more towards EPYC, their server processor, which has outstanding margins. Year-over-year cash up $1.7 billion. Year-over-year debt down $249 million to $314 million. AMD can pay off the debt today if they chose, so their balance sheet is strong. AMD's balance sheet was a dumpster fire just 5 years ago. Lisa Su turned their balance sheet from trash into one of the strongest in the business. Lisa Su has always emphasized a strong balance sheet. Just one image to show how AMD has changed in the perspective of their clients. Microsoft servers used to be Intel exclusive. Now almost half of their lineup is AMD. Share gains, ASP growth. AMD is not sacrificing prices to gain market share. They are doing it by releasing superior products. More market share gains. AMD is getting their claws into all of the largest cloud players. Data center revenue doubled year over year, while Intel's data center revenue decreased significantly. Intel claimed digestion for their weak performance. I say they're setting aside Intel and are gobbling up AMD. Oh, and did I mention a full year forecast boost? AMD is about to go for a ride. Strap yourself in. I expect a 3x out of AMD in the next 5 years. Now up for stock number 2. And that is Palantir Technologies, ticker symbol PLTR. Palantir trades at $20.46, market cap $38.4 billion. Palantir is trading at 50% below its high. It's a nice discount. And at a buy now price at below $20. I say if it dips below, just gobble it up. Let's see why. Palantir has a market cap of $38.4 billion, PS of 31.6, forward PE of 156. Seems expensive, right? Now, what do analysts think of PLTR? Analysts expect revenues to grow 34.9% this year, 29.5% the next. I think those numbers are sandbagged. I'll explain why in a bit. Earnings are expected to drop. What are they thinking? Palantir expects 30% CAGR over the next 4 years. I believe they are sandbagging this number as well. Because they are a newly public company. Newly public companies tend to do that because they want to look good in front of the investor community. But yeah, I think it's sandbagged. Let's see why. So let's look at the numbers. US revenue grew by 81% in Q1. Active commercial pilots have more than doubled. That's future revenue. US government revenue skyrocketed 83%. That's enormous. 49% revenue growth, very nice. $151 million in adjusted free cash flow. That's a big jump of $441 million year over year, as you can see in the graph. So they are now cash flow positive, whereas last year they were significantly cash flow negative. Billings grew 248% YOY. Commercial was up only 19%. But that number is so small. I'll go into detail on this in a later video, but I'll give a hint. There's a Trojan horse situation going on here. I'll describe that in a future video. 11 new commercial customers. Pay attention to revenue per customer. That's a very important metric. It is up 29%. Revenue per customer will keep increasing as they leverage more of Palantir's offerings into more of their business segments. So what exactly does Palantir do? This has befuddled Wall Street and is why the stock has been beaten down and is trading at a nice discount. Palantir takes billions of pieces of data from disparate and separate sources and combines them into one model. On top of this centralized model, Palantir has a data analysis tool. It includes AI, machine learning, and in this layer, Palantir calculates probabilities and statistics and provides the best options to whoever needs it the most. I know that sounds a little confusing, but I'll go into more detail. To make it easier to understand, it's like playing a video game with cheat codes. Palantir makes 2 products, Foundry and Gotham. What is Gotham? In short, Gotham is an operating system used by the US military to make the military more efficient and save lives. I did an in-depth video on Gotham recently. If you want to see Gotham in action, I'll leave a link in the description. Since I've already gone into great detail on Gotham, I can keep this segment short and move on to Foundry. What is Foundry? Palantir realized that the features and insights Gotham provides would help businesses operate better, so they migrated Gotham to Foundry. Foundry is gobbling up contracts left and right. Remember, Palantir has a monopoly in both these two products. These customers are like glue. They have nowhere else to go, and Palantir provides great insights to make their businesses operate better. Foundry has a variety of archetypes for different business models and situations, like supply chain, carbon impact, managing the global issue, and many more. This deal is worth potentially $440 million over 4 years. Another deal with the military, Air Force, and even nuclear plant safety analytics. PG&E will use Foundry to enhance the reliability of electric grids in California. Yes, the California that gets yearly brownouts. Foundry will streamline data management across the company and improve its electric operations and asset management. PG&E has already started the development of its software to create a single, integrated platform to give decision makers a real-time, complete operational picture. Over time, it will expand to wildfire risk mitigation programs. The UK is also using Foundry to manage their response to the global issue. My prediction for Palantir is for it to reach $500 billion to $1 trillion market cap by 2031. Now on to stock number 3. And that stock number 3 is, wait for it, Tesla. Ticker symbol TSLA. Price is $576, down from $900. A 30% drop. Market cap $555 billion. I bet you guys didn't expect me to pull Tesla out, but I did, and there's a reason why. PS of 17.94 seems expensive, right? But it's down from 25.49 from the new year. Forward PE 129.87. This is just too high. Tesla will push out numbers that these analysts can't believe. I'll explain why. Now, what do analysts think of Tesla? 56.2% growth this year? That's a joke. The real number will be close to 100%. 33.6% next year? Also a complete joke. Where did that crazy 56.2% revenue growth number come from? Analysts only expect 800,000 cars delivered in 2021, roughly. That is wrong by magnitude of 200,000 cars, in my opinion. Tesla already has 1 million units of installed capacity as of the end of Q1 2021. Still, they think it will only reach 800,000 this year? Does this look like Tesla is poised for 56% growth? Nope. Look at that, Q1, year-over-year deliveries increased 109%. Profits are healthy and growing fast. Let's even things out with a trailing 12 months chart to see their run rate. These numbers are a banger. Analysts don't expect about 800,000 cars this year. It's a joke. I mean, just look at these numbers. It speaks for itself. Auto revenue up 75% year over year. Adjusted EBITDA up 94%. Cash up 112% to $17 billion. Not to mention two new gigafactories coming online later this year. These factories won't produce much cars this year, but the two existing plants already have capacity to cross 1 million cars a year. Texas, and expansion in Shanghai. Oh, and you can't forget the 4680s that will put Tesla up a notch from any wannabe competitor. The 4680s will go online probably early next year. These, while great, however, are not what makes Tesla a buy today. What makes Tesla a buy today are their FSD software, which is leaps and bounds above any competitors. This image is from YouTube channel Dirty Tesla. Check them out for a series of great FSD videos. It's really awesome. Tesla will beat the competition to the market with a generalized self-driving vehicle that will work anywhere. Which leads to the real moneymaker, robotaxi. Estimated TAMs for robotaxis range from hundreds of billions to a few trillion. It's hard to peg TAM right now, but it will be massive, and Tesla will be the first player in this space. It's going to push Uber, Lyft, and the others out of business. Tesla's going to gobble up all of that market. Robotaxis will be cheaper than owning a car. Why own a car which costs you roughly 60 cents a mile when you can get a robotaxi that costs 40 cents a mile? Makes sense, right? This will change the entire landscape of cities and towns. This is big. I expect Tesla to 10x in 10 years. Yes, that will put them at a market cap of $5 trillion. Yes, they will be the biggest company in the world. And comment down below, what companies are you buying now? Hope you liked today's video. Smash the like button and please subscribe to the channel. It helps us out with the YouTube algorithm. I'll see you in the next one.